Okay folks, welcome back to Pete's Investing. It's March 12, 2024. This is the gold technical analysis. We're still in a bullish trend, but just be careful. The price is making new highs and we've actually hit a divergence in the medium to short term. So let's go through that analysis. So again, for those new to the channel, we've got the weekly, daily and hourly, and we look at all time frames. If you want to trade on a lower time frame, we go by the daily at the least, but preferably when the weekly is aligned as well. And by alignment, I mean trend. So you can see here on the ADX 25, we've got a bullish trend on the weekly, bullish on the daily, and also bullish on the hourly, although it's starting to drop off a bit. First off, we also look at the CCI 150 as a trend indicator, but also as a divergence indicator. Now back here, in the last video, we did have a bearish divergence on the CCI versus the price. Now that's actually risen higher than that entry point, up to that point there, which now invalidates that divergence. So we'll delete that divergence line on both the price chart and the CCI. But that's basically what we look at as a divergence. So there's no divergence currently. The CCI is trending in line with the price. It has hit this key resistance at 21.95. On the daily, let me just blow that up. We've also got a bearish divergence. You can see there that's still in play versus higher highs on the price. After hitting that resistance, we may see it fall off. Now, again, notice the CCI is coming back towards this moving average band of the CCI, and that indicator is in the description below if you want to watch that video, how to draw that. We've also got, I'll just show you these arrows. We've also got these arrows which indicate potential tops and bottoms, and that is also in the description below if you want to learn how to identify those potential tops and bottoms. Doesn't guarantee a potential a full-scale reversal. Like you can see there, it's actually fallen off a bit before taking further upside. So it just means a bit of a retrace to the downside. I like to use these clusters of arrows in alignment with divergence. Now at the moment, there's no clusters on the daily chart, but that is a key resistance, so we're going to respect that. As well on this chart, I've also got this Fibonacci expansion, and it shows currently hovering around the 61% expansion of that Fibonacci expansion range. On the hourly, we did have a bearish divergence back here before our last video. Now this is actually extended out further. Notice it's still a bearish divergence versus the price up until that high. So that's still a bearish divergence on the hourly. So I'd be respecting that and watching to see if it's going to break to the downside. At the moment, it's still hovering around that level there. I'm just under that resistance. So we're going to hold that potential reversal. I don't trade this, but what I do with these divergences is look out for any potential exit of trade. So if you're going long in this case, it'd probably be wise to take note of a resistance, but also a potential divergence in play. And if it starts falling off, then I'd be looking at exiting the trade, in my view. But I'm not telling you to close out your trades. I'm just giving you some ideas on how to manage your trades. In terms of, I do track these divergence with those little, just let me blow that up again. I've got these little rectangles, and that's where there was bullish and bearish divergence along the road. So there you can see there was a bearish divergence that fell off, and that's measured at the 23.38% Fibonacci level. A little bullish divergence there, and in a longer term, another bullish divergence. Bearish divergence there, bullish there, and so on. And currently, and the way I measure these divergence, I take it back to the previous low. And if I was going to measure this one, I'd take it back to that previous low there, to that high. Now this is assuming the price starts falling from there. And like I said, it could keep going high. If it breaks through that resistance, that's always possible. But if it starts declining, that'll be the minimum level of retrace in that 23.38%. As far as the trading idea, like I said, we want to see trade in the direction of the CCI 150. So you can see there when it breaks above the moving average range, we go long from that point there. And we don't take trades when it's within that band, and we only go short when it's below the band. So in this case, during that previous period, you can see there from the 21st of February on the two right-hand charts, this is the daily, and these are the 1 hour charts. If you want to trade the daily, make sure that you're looking at the trend of the weekly or higher. So here we're trading the daily as an example. So starting from that point, let me just expand this first. One of the first rules is we look at going long when this is a Heikin Ashi price chart. We go long when the Heikin Ashi is green and go short when the Heikin Ashi is red. That's one rule. then the main rule is trading in line with the CCI when it's above the moving average band, when it's going bullish, or going short when it's below the band, like I said. So in this case, we take trades from that point. You can see there on the weekly chart on the left, the first chart on the left, that's when it breaks above the moving average band. We take long trades using the average down approach. You can see there it's averaged down a couple of times, and this is the stop on the one on the right. This is a stop loss approach. So had you taken trades from that point going long only, you would have generated $122 on this particular trade, or $19 trading that on the stop loss approach. Now again, when you can see it's falling off, and you probably want to close out your trades or stop taking long trades, especially if it hits below this moving average band. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.